Hello everybody. Hope you're doing well. It's Jamie Troll here, your favorite CPA and financial literacy coach. And today we're going to be talking specifically about the pros and cons of an LLC versus an S Corp. So if you've been wondering what the advantages are to being one or the other, LLC or S Corp, we're going to talk all about that today. Now, this is one of my most asked questions, I would say, is when does it make sense to become an S corporation? Who is this right for? What are the advantages? Does it really save you taxes to be an S corp? And we're going to talk about all of that today because there is a ton of misinformation out there. And a lot of that is just, well-meaning business owners and people who have some experience in this, but perhaps don't know all the details and how it really works to be an S Corp. So before you listen to anybody out there on the internet or even your friend's brother's wife who is a CPA, right? Let's learn a little bit about the basics ourselves here. Now, before we jump into this, I want to talk about the similarities between an LLC and an S Corp first, because I think that's really important to understand. Because again, there is some misinformation out there that I think we want to clear up. So one important thing to understand about LLCs and S Corps, and especially in the context that we're talking about here, is that the legal entity is LLC. That is a legal designation, okay? And the tax election is S Corp. An LLC is a legal entity, meaning you file your articles of incorporation with your state, you create this legal entity that is your business, right? And you are one of the owners likely, or maybe the only owner of that business in an LLC. Now, you don't actually form an S corporation legally. What you actually do is you elect S corporation tax treatment. Now, in the context of this video, I'm going to be talking about LLC versus S corporation. However, you can also elect to be taxed as an S corporation if you are a C corporation. But most small businesses are not C corporations. That's typically reserved for larger businesses. I don't get into that a ton on this channel. So we are going to keep this conversation focused on the differences and similarities between LLC and S Corp. So again, if you are an LLC, if you've created the legal entity of being an LLC, then you can decide whether you elect to be taxed as an S Corp by the IRS. There is a tax designation form that you fill out to make that election, okay? So unless you've checked that box, unless you've filled out that form in order to elect S corporation taxation, okay, and that's called Form 2553. If you have not done that, or if your accountant hasn't done it, then you are just an LLC, which means that you are taxed similarly to a sole proprietor, okay? So it does get a little bit confusing in there, but I want to make sure that we understand that whether you're an LLC or an S corporation, the legal protection is generally the same, right? The thing that gives you the legal protection, i.e. protects your personal assets, is the LLC, the Limited Liability Company. So that is the legal step. The tax step is where the S Corp comes in. So if anybody tells you that an S corporation has more liability protection or anything like that for owners, that's not true. The liability protection comes in as an LLC. So let's start with the pros and cons of an LLC, and then we're going to talk about the pros and cons of an S Corp, which you'll see there's a little bit of the opposite side of the coin, right, with each one of them. So you can decide what is best for you. Now, let's talk about the pros of being an LLC. Now, an LLC means you have the legal protection, just like you would in an S Corp, but it's really simple. It's really simple to set up. You're just going to file that with your state and become an LLC. It's typically pretty cost effective. It usually doesn't cost a whole heck of a lot of money. So it's a very simple structure. There aren't a whole lot of extra things that you need to do when you are an LLC, which makes it cheaper than if you were to be an S Corp. And we'll talk about that a little bit more when we get to S Corps. The other great thing about an LLC is you can have unlimited members. So if you have a multi-member LLC and you have lots of different owners, there is no cap on the number of owners that you can have. So that's great. And the third pro to being an LLC is that there's only one tax filing that you're going to do. There's no separate tax filing you have to do for the LLC specifically from an income tax perspective. So for federal income taxes, you're just going to do your normal 1040. You're going to file a Schedule C in it, and that's going to include everything from your business. So that's going to be where you report all your revenue and your expenses. It is a pass-through entity, and so So everything's just going to go right there onto your Schedule C with just that one tax prep fee. So there's no additional tax filing you need to do, just one extra little schedule in there for your LLC. Now let's talk about a couple cons of being an LLC. So if you are an LLC, then that means you might, keyword being might, be paying more than you need to in self-employment tax, because 100% of the profit in your business is going to have self-employment tax that you're going to have to pay on it, which is 15.3% generally. Okay, so that's Social Security and Medicare. So that's something that's just really important to know. And the difference there when we get to S Corp is an S Corp can reduce the amount of your income that you need to pay self-employment taxes on. Now, you're still going to have to pay taxes always on your income, right? 100% of your income, i.e. your profit, is going to have income taxes, but you can save on self-employment taxes sometimes by being an S Corp. And the second con, which some people would consider to be a con, is that with an LLC, you can't actually pay yourself an actual paycheck, a W-2 salary. So what that means is you're not going to pay yourself via payroll. You're just going to take owner's draws out of the profit in your business. And that may not be a drawback to some, but sometimes that can come up potentially when you're trying to get a loan, maybe a mortgage or something like that. And some lenders might prefer you to have actual W-2s versus just taking owner draws out of your business. So that may be something that would come up. And sometimes being able to take a salary also can simplify things, because then you're able to withhold some of your taxes from your paycheck automatically. Your paycheck comes through automatically. And so it might be a little bit simpler than dealing with owner's draws all the time and paying estimated taxes. Okay. But I will say, I'll jump ahead a little bit and say that even as an S Corp, even if you are paying yourself via payroll, you still may have some self-employment tax that you need to pay estimated taxes for. So now let's flip over to being an S Corp. What are the pros and cons of being an S Corp? What are the advantages and disadvantages of being an S Corp? So the very first one is kind of the opposite of what we talked about with the LLC, which is you can save potentially on self-employment tax. A portion of your earnings is not something that you have to pay self-employment tax in when you have an S Corp. Essentially, with an S Corp, you get to divide your income into two different buckets. One being your reasonable salary, where you have all the taxes taken out, income taxes and self-employment taxes. And the other bucket really being the rest of your profit in the business that you're essentially saying you're getting not as an employee in your business, but more as an investor. And so that part of your income still has income taxes on it, but you don't have to pay self-employment taxes. So that is where the potential savings of self-employment taxes comes in. Now, I will say again, because I want to squash the rumor mill, a lot of people think you can save tens of thousands of dollars, right, by being an S corporation on your self-employment taxes. But in general, that's not typically exactly how it works. You do still always need to pay that reasonable salary. You do need to be paying self-employment taxes on that portion. The IRS will look for it if you are not doing that. And also, there are some additional new things that came out in 2018 that made it even more complicated than what we're talking about here. Now there's the new qualified business income deduction, which I am not going to get into because it's super nerdy and really complex. But ultimately, the impact of that was to make it even less helpful to be an S Corp for some businesses. It took away some of the benefits in some cases. Now, again, it gets really, really specific. So it is always a good idea to have a CPA do a calculation for you. Just make sure that they're including the impact of the QBI deduction in their calculation, because some still do things kind of the old-fashioned way, and that's not really going to give you an accurate picture of how much money you could save being an S Corp, which you want to know before you make that decision. So benefit number 2 of being an S Corp, i.e. electing S Corp taxation, is that you now can and actually are supposed to pay yourself a W-2 paycheck. So you are supposed to pay yourself that reasonable salary, and you are supposed to withhold income taxes and self-employment taxes on that amount of reasonable salary. So that is a pro for some people. It might also be a con for some people because there is a cost associated with running payroll. However, it does allow you to withhold taxes, maybe not have to pay as much in estimated taxes as as you otherwise would. And it allows you to just have that W-2 salary that might be beneficial, again, when going for a loan or something like that. And the third pro is that oftentimes S Corp can give you more credibility with investors or with banks if you're trying to get debt, right? It can give you a little bit more credibility than, say, an LLC, but it's still probably a little bit less than you would have if you were a C corporation. But that is one of the things that, if you're thinking about getting extra capital, going after capital, maybe electing to be taxed as an S Corp can make sense for you, and that might be something that you want to explore. So what are the cons or disadvantages to being an S Corp? Well, there are some for sure. So being an S Corp is largely going to cost you more, likely in administration fees and in compliance fees. So what does that mean? Well, you're gonna have to pay for payroll now. You probably are gonna have to pay more to your accountant because you're gonna have 2 tax filings now. You have an extra tax filing that you have to do for the corporation itself, which is due earlier on March 15th, so that you can generate the reports you need to do your personal filing, which is due, as you know, on April 15th every year. So there are some additional things. There's some more corporate formalities and things that you need to do and keep up with legally and tax-wise in order to stay in good standing as a S corporation. And that's another thing that I want to bring up, because when you are talking to an accountant and they're telling you about the tax savings that you could have potentially as an S corp, not only do I want to make sure that you're asking them, okay, does this include the impact of the QBI deduction? I also want you to ask them whether they're considering the increased compliance costs in that recommendation. So again, it can cost sometimes a few $1,000s or more just to maintain that S Corp status, but a lot of that may be going to your accountant to keep you compliant. So if you're gonna save money on one hand in self-employment taxes, but on the other hand, you're gonna have to pay your accountant the majority of that money to be able to stay compliant, does that really make sense? Or are we just shifting money from one pocket to the other? So I think that's important to really delve into to make sure you understand that it is the right move for you. Now, really quickly, this is a really important time for me to interject and tell you that it can be a really good idea to get an independent assessment of whether an S Corp status is right for you. So that's something that you might want to consider. And if you are considering that, and if you want to understand some of the rules and make sure that you have a full grasp of how to figure out whether this is right for you and how to stay compliant if you do decide to become an S Corp, well, then I want you to go to jamietrell.com/S Corp Toolbox. There are tons of tools, whether you're in the process of deciding if S Corp is right for you and you want to do maybe some second checks after talking to your CPA, or maybe you just want to understand it further, or if you already are an S Corporation and want to just make sure you're doing everything correctly or calculate out your reasonable salary, everything is within the S Corp Toolbox, so go check that out. Now, back to our pros and cons list. There are 2 more cons I want to go over with an S Corp that I think are important to know about. And the first one is the limitations on what you can deduct. It's not quite the same as an LLC where you might deduct your cell phone or your mileage, things like that. They're not deductible, at least not directly to your S corporation. You do have to have what's called an accountable plan that you set up that's an actual reimbursement plan, because remember, you are separate from your business and your business then has to reimburse you as an employee if you are an S corp, whereas as an LLC, that's a little bit more lax, right? There aren't as many rules around it. So you do want to make sure that you do that so that those reimbursements remain tax-free. Now, that also applies if you're using some tax loopholes like employing your children. You can't employ your children directly as an S Corp owner the way you might have been able to as an LLC. There are additional ways you need to go about that, maybe by forming a separate entity that employs your children and doing a reimbursement situation. So that is a little bit more complicated and just something you want to be aware of if you are moving from LLC to S Corp. And the fourth and final drawback to being an LLC that I'm going to talk about today is that it may actually reduce the amount that you can put in your retirement funds. So depending if you have a SEP IRA or something like that, you may be more limited into what you can put in as an S Corp than you might have been as an LLC. So again, that's going to depend on the type of retirement account you have and your specific situation, but that's something to be aware of if you're someone who likes to max out your retirement accounts. So overall, the decision to become an LLC or an S Corp is really individualized, and it can be a really good idea to dig in and make sure you're not just following the advice from other business owners maybe that you know, but you're figuring out what's actually best for you. So if you want more resources on this topic, boy, do I have them. Check out what is on the screen right now. We've got lots of things that can help you be successful as an S Corp, or decide if it's right for you, or figure out when might be the right time to do this. I will see you next time, and thanks for joining me.